Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 12, 2015. Daily chart of the SPY. I've even taken away the other blue trend line. It's not important for now. We're way past that point. So what we have is yesterday's video, I said the market, if it continued up after hours or through after hours. Yesterday it was up on the rumors of the Greece deal with the EU, and then there was no deal, and then all of a sudden the Ukraine struck a deal with Russia and all that nonsense. You know what? This is about the 22nd deal struck between Ukraine and Russia in terms of a ceasefire, and it's the 42nd time there's a deal with Greece. It's over and over and over again, and what'll happen is when the market is down the next time, it will be because of one of those two things reversed. It didn't happen, it was a rumor, there was no ceasefire, something like that will come out of the news, and it just happens over and over and over again. It's just like the market, it just keeps repeating itself over and over and over again, and it's just mind-boggling to me how nobody sees that this goes on. They just continuously do it. All right, that's it with the rant. All right, let's move on to the market. So yesterday I said that we would go in between, if we continued higher through the after-hours session into this morning, then we would go into the 208 to 209 area. Okay, so the high today was 208.99. Where did I get that from? This high here was 208.97. We pierced through it by 2 pennies and then just pulled back a little bit, but it was a strong market, and energy was strong today. Basically, it was a trend up day, if you will, in the market. There was a couple of chinks in the armor, one way or the other, but all in all, it was a pretty strong rally across the board. You had the transports up. You had the Dow up pretty nicely. You had the NASDAQ up. You had the Russell 2000 up. So everything was participating, and we went into the target zone. And now the question is, what happens next? Do we continue going higher, or do we pull back? And if we do, what's the scenario? What does it look like? Okay, I know that's the burning question. And so I'm going to give you what I've got. This is everything I've got to the best of my ability. Basically, the market should stall here. And when I say should stall here, you've got to give it some leeway, okay? You've got to give the market up to 210 leeway before you can say something else is going on. So that's basically 10 points higher. It's getting into S&P 2100. That's going to be an important psychological level. And why is that important now? It's important now because tomorrow we get into the beginning of a holiday weekend. And normally on a holiday weekend, you will see the markets float up higher into the holiday weekend. Rarely do you see a market down on a Friday, and B, a market down on a Friday before a holiday weekend where we have Monday off and the market's closed. It's President's Day Monday. So that tells me that it would be very easy for them to achieve 2100 in the S&P tomorrow. It'll be most likely light volume unless you've got a heavy news event, and I'm not aware of any. And basically, you're looking at 12 points in the S&P tomorrow. That could happen in 10 minutes. Okay, it could happen overnight. Anything goes. How much higher from there? I would have to say I would be surprised if the market continued higher than that into next week, and here's the reason why. Today marks one of my daily cycle turn days, and they're always plus or minus a day. Well, minus was yesterday, so that's out the window. So it's today plus a day. What's today plus a day? Today plus a day is tomorrow. The market can still be up tomorrow and play out a little bit down next week and still work out where the cycle did top on time. Okay, so that's another reason why I'm a little skeptical that we would see a down day tomorrow, even though my daily cycle says a turn today. Now, once we get in, let's say that plays out like that and we get into next week. What happens next week? If the market is going to pull back, and I believe next week it will pull back, However, and I am taking both sides here, and I realize that. I know it's frustrating to hear somebody say the market could go up and down, but what I am saying is tomorrow being a holiday weekend, the market could go a little higher, and then early into next week, if there was any kind of positive news over the weekend, we could even go a little bit higher. But when I say we should stall out here, it's because my calculations are telling me that the market doesn't have enough velocity just to keep going. Now, if you'll remember way back when, it was probably even a couple of months ago, you can go back to the videos from probably late in 2014, I had said that there's a number of 2135 on the S&P E-mini, okay? And that looked way, way far away at the time. That doesn't look so far away now. Here's what I will tell you. If the market does pull back into next week, maybe even next week and beyond, maybe even the market comes back towards this blue trend line, that will scare enough people away to think something's wrong. However, the market will still be in an uptrend. And here's the news, okay? You're going to see higher prices. We're going through these highs, folks. In 2015, okay, within the next few months, we're going to make higher prices in the S&P, okay? So pullbacks are to be bought until something changes with the makeup of the market, okay? But right now, nothing's changed with the makeup of the market. Therefore, we're buying pullbacks mode based on all the other indicators that I get on a regular basis, and I pass on to you. We're in the camp of we're going to see higher prices, okay? Today is not the top of the market. Let's get that square, all right? Tomorrow may be down, but today is not the top of the market, all right? So that's everything I've got in the stock market. I'll keep you going. We'll do it again tomorrow, one day at a time. That's what I know today. Let's move on to crude oil. Crude oil had a big update today. It was up like 5%, I think. And I was a little bit disappointed because I thought we were going to see lower prices before we saw the rally we saw today. And I missed the rally today, and so be it. There's another trade around the corner. Always. I can't even type in you. I can't talk and type at the same time. It's impossible. So here's what's going on with crude oil. Futures contract looks the same as USO. So USO right here is now coming into an interesting position, okay? We're now in what I would call like a channel formation, okay? If you drew a line on the bottom here and a line on the top here, and for now you can even conceptualize this blue line is the 50-period moving average and the red line is the 20-period moving average. It's in this channel in between, okay? The longer it stays in between and above the 20-period moving average, the more likely you're going to see higher prices in crude oil. How high can you see in crude oil? Well, in the USO, we could see up into this resistance area here. This is going to be formidable resistance in this area. So what I'm going to say right now is 21.5 to 22 is going to be big resistance for the USO. And I think that's going to coincide with about $57, $58, $59 in the price of crude futures. Right now we're at 51. Okay, so that's a big move. But I think you're going to need more of this kind of back and forth, day up, day down type of reactionary move before you would see a larger move up here. That's the best I've got with crude oil right now. Other than that, I can't tell you we're at a top or a bottom, a weekly top, weekly bottom. I don't have anything like that in the next day that I can see. So this is everything I've got on crude. Let's move over to gold. We'll move it along because I do want to talk about the bond market also. It's interesting. Okay, so here's gold. So GLD was up a little bit today, just fractionally. Gold was up a couple of bucks. It was up $1, $2, $3, $4 during the day. In the Globex session right now, it's up about $4. It's $12.24. My downside target, remember, was $12.12. We didn't get there. I think we got as low as $12.18. Frankly, I'd like to see that downside target hit because That would be important if it was. And if the target was hit and we bounced off of it, it would tell me that it was a good target, right? And that would make me more comfortable. It looks like our downside so far has been 1650, and you know, maybe that holds, maybe it doesn't, but I'm not worried about it because the downside that you're going to see in GLD is really about 116, give or take, okay? Give or take a little leeway. 116 is about that coinciding number with the gold futures at 1212. So I'm a buyer over here, and what you'll find, remember the higher low scenario, what you'll find if we do bounce off this level, which I believe we will, is you'll have a low, a series of higher lows, you'll have another higher low, and that sets the market up to go higher. But remember the bigger picture. I do think gold is going to struggle for a little while, maybe even struggle to get through these highs here, but irregardless, I want to be long gold here because I think there's a multi-dollar move, which means in the price of gold futures, you know, $30, $40, $50 move could be in our hands, $3, $4, $5 move in the price of GLD if we bounce off this 116 level. So I'll keep talking about it. I'll keep you going one day at a time. But right now it was just basically a not much day for gold, but it was up slightly, and we'll see what tomorrow brings. I don't have anything really other than that to add. Let's talk about TLT. I did some work on TLT. You know, I've been working on the bond market, like I said last night. And so I started doing a little bit of work on TLT. And, you know, I've been telling you that this is going to be pretty good support here if we came into this 127.75 based on this pivot and this pivot here. And you can see that the market's going sideways along with this 50-period moving average. The longer it does that, the more prone it is to go lower. But here's the deal, and regardless of what I think the long-term picture is about the price of TLT and interest rates and bonds, I do think the price of interest rates longer term are finally going to start moving higher. That means the price of bonds and TLT is going to move lower, much lower than this longer term, but nothing moves in a straight line, and there's way better opportunities in the middle of that stuff going on that we don't want to miss out on. So this is what I'm talking about, is could be one of them. And what this opportunity is I have a better level, I think, on if we see interest rates spike up a little bit more than even I'm anticipating, because I think they're probably going to stall here around this 50-period moving average. And if you flip this around to interest rates, I know I'm jumping around a little bit, but I'm going somewhere with this, so stay with me. If you're looking at interest rates, we're basically up at 2% today, okay? And I said, you know, around 2%, maybe a little bit higher to, you know, 2.05, something like that would be about the top end. Maybe we get up to 2.1, and then I thought we would have some trouble. But let's say we kept going. Let's just say that happens, or maybe we get to this level and we just go sideways, and then we're ready for another move higher. Well, let me go back to the TLT, okay, because I'm going to show you where I got a number from. So I'm going to go over to the weekly chart, all right? And what I've done is I've put in a Fibonacci retracement, and on the weekly time frame, back from this low here, all right, this is from the beginning of 2014, okay? So it's basically a little over a year ago, up to this high here, which is right now, like the end of June. This is the end of January 2015, okay? Your 38.2% retracement is at 124.23, and it just so happens that 124.23 coincides with this important pivot high right here, okay? And a lot of choppy, you know, back and forth motion and remotion and reaction in this area, in this chart, for quite a while, for like a couple of years, okay? Or a little over a year, all right? So you have an important pivot high right at the 382 retracement, which is 124.23. So I thought that was interesting, and I know for a fact that I'm going to go long if it gets there, right? If the TLT gets down to 124.25 in this neighborhood here, right? We'll pin it down when it gets there as it gets closer. Okay, this is the level I want. I don't think this is our level. This is the level I want. Okay, this is the one that's going to promote a multi-week, maybe even multi-month rally off this level, okay? Multi-week for sure, in my mind, okay? So that's why I wanted to talk about that tonight. It's just interesting, and it looks like something setting up that could be coming in the next few weeks. So I wanted to kind of get you primed to start watching that so you learn what you're looking for, and we can watch it together. All right, I think that's all for tonight. Hopefully it's been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.